Welcome to Joe's Investment Express. It is Friday night. TGIF. Let's work tonight on some investors' mindset. Investing is such a mental game, and that's what makes it so doggone fun and so difficult. And one of the hardest things that we as investors have to wrestle with is FOMO, the fear of missing out. And I have been battling this demon for 20 some years, and I finally figured out how to handle it. So let me pass these two tips on to you, and it should save you a lot of emotional anguish and hopefully some money too. The first is how we deal with stocks that take off without us, stocks that break out when we're not on the train, so to speak. And the second is how do we deal with that aggravating phenomenon of a stock that continues to go up after we sell it, and our fear of selling a stock because, maybe it'll go up. Let's talk about those two things. Before we do, remember, this is not financial advice. This is just for education and entertainment purposes. I'm not a financial advisor. I have been investing since 1996. So the first type of FOMO, which happens to us all every day, is we see these stocks that break out and keep extending day after day after day without us. And it is so painful to watch them, and we salivate thinking of all that money we would have been making if we had just found the stock a few days earlier, or worse, if we'd been watching it, saw it break out, and didn't pull the trigger. Here is a great example. This is Intrepid Potash, which has been going up for, 13 of the last 15 days. It's up almost 100% in a month. So what do we do? Do we jump onto it here? No, absolutely not. I guarantee you the day that you jump on this overextended stock is the day that it rolls over and pulls back into a base. So here's how we handle this. You say to yourself, Joe, or whatever your name is, I missed this one, and that's okay. I'm going to catch the next one. Do you know how many stocks there are in the U.S. stock market? 4,000. There are 4,000 other stocks besides Intrepid Potash. Every day, there are a bunch of stocks breaking out and a bunch of stocks about to break out. So if you miss one, who cares? There's other fish in the sea. And it's not like in the dating world where the other person has to like you, right? You can invest in these stocks at any time, and they don't even know you exist. That's the great thing about stocks, or one of the great things. The second thing you do is no stock goes up forever, but a stock that breaks out powerfully like this, almost always, I'm going to say 9 times out of 10, it'll touch up with its 21 or 50-day exponential moving average and then take off again. So if you just wait for that touch up and buy there, then you are, I'm not guaranteed, but you got a great chance at making money. But if you buy up here and it pulls back, you're going to get shaken out before you can do that. Let me show you an example. Here's a little stock way back. I think this was 1998. Look at this breakout. This is Amazon, by the way. Look at this breakout, and doggone it, you missed it. But instead of buying up here, all you do is you wait for it patiently to pull back to its 21 exponential moving average, which is right here, and you buy maybe half of your position here on a bounce off. See this bounce? You buy the bounce, and then it comes down to the 50-day. You wait and watch, and then if it bounces off, then you buy there. And now let's look what happened. Well, you know what happened, right? It went up for, the strongest 2-year run. That doesn't look like much, but split adjusted, that went from like 1 to 100. So you do the math on that. So that's how you deal with that type of FOMO. The other type of FOMO, and this one I've got a really firm grasp on. I have no problem waving goodbye to stocks and saying, good luck. See you later. I'll catch you on the pullback. It's not hard for me to do anymore. It used to be. I used to FOMO into stocks all the time, get bounced out with my 10% stop, and then they'd keep going up again. But the harder one for me, and I'm sure this is hard for you too, is the fear of taking a profit. Because you worry, what if you sell that stock and it keeps going up? Or what if you do sell it and then it keeps going up? Then your worst fear has been realized. So what you have to do is not look at it like that. You have to look at it as every time you cash out of a stock for a profit, you are one step closer to your goal. Maybe your goal is retiring 5 or 10 years early. Maybe your goal is quitting the rat race and being a full-time professional trader. Maybe your goal is paying for your trip to Hawaii every year using profits for your stocks, from your stocks. When you bank a gain, when you sell a stock at a profit, you are that much closer to your goal. You are moving closer to your goal. And it doesn't matter if the stock goes up 1% after you sell it or 1,000%. It doesn't matter. You won. You beat Mr. Market, and you're one step closer to your goal. And now you can watch it and wait for a pullback, or you can move on to the next stop. So in conclusion, we can't chase stocks, and we can't worry about what happens to them after we sell them. Yeah, we want to watch them and wait for a good re-entry point, but we just let them go. I put a little footnote. When I sell a stock for a profit, I write beneath the stock, there's a little notation area on the stock charts. And then I write, sold for 12% gain. Great job, Joe. Re-enter. And I give myself positive affirmation. That's what you do. You don't live your life in fear of these stocks taking off without you, or keep going up after you sell. We got to stay disciplined. We got to be unemotional. We got to be objective. And we have to be consistent and not let our emotions conquer our strategies. Okay, everybody, have a fantastic weekend. I hope that was helpful for you. If you have anything you want to add to the discussion regarding FOMO, throw it down in the comments section. And if you could like this video, that'll help get it in front of other people. Take care, everybody.